Welcome to DACM Insights. Each week, we sit down with leaders shaping the digital asset space, founders, investors, and the people actually leading the crypto space forward. Whether you're allocating capital or just trying to make sense of where crypto's heading, you're in the right place. Today, we're joined by Kate Cooper of OKX. She runs the business locally. And to start off our conversation, Kate, I just thought I'd hand it to you and ask, would you mind explaining your journey into crypto?
Yeah, happily. I mean, I'm almost 25 years into my career now, which puts me at the very aged end of the crypto spectrum, but certainly have always worked on the edge of frontier technology right back in the noughties when Web 2 was just coming to the fore. I was actually the first ever head of social media for the UK government, which was a fascinating role, and then worked across the Web 2 space for 10 years running my own business. Came to Australia and decided that banking was where it was at, so joined Westpac and then subsequently was at NAB. And in both places I was leading innovation and transformation. And that's really where my interest in digital finance came from. I got really into the underlying technology and the potential for blockchain to completely transform the financial system globally. And that was my motivating factor, is actually what can we do to change the way finance runs globally, both in terms of efficiency, but also in terms of accessibility and transparency. So joined OKX 12 months ago as the local CEO, really to bring, I would say, a next level of compliance risk rigor to the Australian marketplace. And so someone who came from 10 years in TradFi, that was the thing I was looking for in my move to crypto, was a really responsible player in the marketplace.
I think a lot of crypto participants share some parts of your journey there. What does it feel getting into crypto?
I think there's a few things that are different around crypto. It's definitely very technology driven, obviously still a frontier technology that's finding its place, finding at scale use cases. There's been lots of pilots over the years. And so the pace of evolution is incredible. It's one of the things I love most. The thing I never feel now is inertia. And so that sense of making a difference, doing a better job for the end consumer, whether that be a mum and dad retail investor, whether that be an institution looking to represent an investment strategy. And so that pace, one of my favorite quotes from Ray Kurzweil is, "The pace of change will never be this slow again." And that's definitely how I feel working in the crypto space. So that really is the biggest difference, alongside the fact that we're genuinely trying to innovate for solutions that change the game in terms of financial infrastructure and therefore lead to better outcomes for the end consumer. One of the things that we did this year is we worked with the Digital Finance Cooperative Research Centre and the Digital Economy Council of Australia to quantify the economic benefit to Australia of digital finance. So that isn't just about crypto, that's about the way the underlying technology can change the way the finance system works. And that was quantified at 24 billion in productivity gains per annum, which is over 1% of our annual GDP. And so I'm really motivated and I feel a sense of urgency around how do we help deliver on that productivity benefit.
I think it's the most fruitful lens to look through. I understand that rabbit hole of going, understanding crypto, it's tech, and tech can be complicated and there's layers to it. But I think once you start to see the gains and productivity gains, but also, the cost out savings, I really feel like this is going to be one of the biggest moments in this, what do we call it, institutionalization. Talking of institutionalization, just before we started, we're having a brief word about the Australian landscape. Maybe you can describe briefly the Australian landscape for crypto and its institutionalization.
Yeah, sure, certainly. And I think maybe if we start at the other end of the spectrum and kind of retail adoption, Australia's had one of the highest penetrations of retail adoption in the world. There's lots of stats that go around, anything from 22% to 35% of Australians have at some point in their lives owned crypto. And so I think that we were very early adopters. I think that we were interested and curious as investors. This is the first new investment asset class in 25 years. And we've certainly jumped on and sought to benefit from the upside of that. Obviously, the market goes up and down like all markets do. But what's been really interesting in the last few years, and especially this was very much evident in my role at National Australia Bank was that in addition to the retail end of the market and mum and dad investors, as well as more serious traders participating, we've started to see institutional scale come into the sector. It's very much off the back of global trends and macro trends, especially around regulatory clarity from the US. But in Australia, we've recently had a change introduced to regulation after 4 long years of lobbying government for policy clarity. Like I've never worked in an industry where I've actively asked to be regulated before, but that's absolutely been my message over the last 4 years. And that clarity started to be delivered by the current government about 4 weeks ago. It was announced, and already at OKX, we've seen a significant influx of institutional interest that we never saw before. And if you think about Australia's standing in the global capital markets in particular, and in particular our retirement funds, we're the 4th largest in the world, which for a country that has a population of 26 million means we punch significantly above our weight in terms of capital potential. And so the early signs are actually with people who own self-managed super funds, which is about 25% of all superannuation assets under management, are entering into the space in a material way. And that's been happening, I would say, over the last 18 months as people have sought to diversify their investment portfolios. But we're now seeing the big superannuation funds look to dip their toe in the water, gain exposure, not just onshore, but also via global networks. So that's been a big move, and the regulatory clarity has helped.
I'd really like to double click on that regulatory clarity because you guys have been doing so much work. I mean, simply pointing out the scale of the opportunity is a great place to start. You've already talked about that, 1% of GDP. And I think these are phenomenal numbers that, in my mind, as a, with a technologist, could actually be significant upside to that number. This is just a number that sounds sensible given the, current scale. But can we really double click on that regulatory clarity? How is that going? Where's it going to? And what's the best model out there globally that you're hoping to adopt?
Yeah, listen, I think what's been really interesting is because Australia's been slightly slower to come to the party, the clever individuals at Treasury who have been crafting the policy have been able to look and learn from jurisdictions globally. And so a good example is actually Japan, which was one of the earliest jurisdictions to regulate the sector. And one of the things that they required is 100% of assets to be held onshore, not held offshore somewhere. And it would actually prove to be one of the biggest factors in investors able to recoup their lost funds at the collapse of FTX. And you can see that translated then in a few years later in the proposed legislation from the current government, which does include quite significant elements around the custody of assets, which is all about the safekeeping of those assets. It's yet to be seen exactly how that will materialize, whether 100% will be required to be stored onshore, but certainly that's a key part of the legislation. And then if you look to markets like, for example, Singapore, where the MAS has been very active in providing that clarity to the Singaporean ecosystem. Again, we've borrowed key elements of that in terms of the digital assets framework that is proposed, which will allow us to be able to define exactly what falls within the remit. And then the last thing is that we've taken the best of local regulation and local regulatory levers, like, for example, the Australian Financial Services Licence. And it will be required that all firms that operate in this space will hold an Australian Financial Services Licence, which again means we're using the best of what we also have at home. So I think the fact that we're a little bit later to the party, even though I would have liked us to be earlier, means that we're able to benefit from all those learnings internationally, which hopefully means that this will be real fit for purpose when it gets rolled out and implemented. And certainly from an OKX perspective, we foreshadowed that this would be the direction of travel that the legislation would take. We already operate under an Australian Financial Services Licence for derivatives. And we've got pretty much all of the processes, the people that we need in order to operate under that high level of scrutiny. We do so already. So we're very welcoming of the clarity that that's provided for the market.
I feel like we're the Stephen Bradbury of regulation. Does that speak to you, or is that too Australian Do you remember the speed skater that he got a gold medal, but everyone fell over? Like everyone, the pins are all falling, and then we're
Yes,
coming in with
yes, yes, and
with
then
clarity.
well, I mean, is that a bad thing if we come through at the end and we reap the 24 billion benefits?
I don't know. Stephen Bradbury's got a gold medal for speed skating. I don't. Waiting for clarity and copying models can work. You mentioned something briefly there, and it's not something we've talked about on the podcast before because it's part of something that we do as an asset manager in the crypto space. But I also note you've got vast experience. Maybe you could talk briefly about custody. You just mentioned it on the way through there, but I think it's an important thing that a lot of institutional adoption is missing. That a lot of these what were problems have been really well solved. Maybe you could talk about your experiences just a little bit on how custody looks these days in crypto.
Yeah, no, happy to. And just for the benefit of the listeners, I ran Zodia Custody, which is obviously a custody business, but founded by Standard Chartered and Northern Trust. So founded by the traditional finance element of custody businesses, but really built for the next wave of digital asset adoption, not just crypto, but also real world asset tokenization, for example. And I ran the APAC region for them and also brought Zodia onshore into Australia prior to joining OKX. So I spent a lot of time deep in custody. And actually, my journey started back at National Australia Bank when we were considering what our strategy should be. And at the time, there were a number of different scandals, including the collapse of FTX. And it was very clear to me that the role of traditional finance was as safekeeper of those assets and providing the foundations that allow for the safekeeping of those assets, which in a digital form actually is quite different, especially if you consider not just business risks, but also risks from cyber attacks, etc. And so it's a fundamental layer in the health of the system. It's a controversial topic in crypto because there are people who are significantly high proponents of self-custody and the ability to self-custody your assets. And certainly if you hold the technological and financial knowledge to know how to do that, that's a route to go down. But what I learned and I found is that actually most everyday consumers don't really understand the mechanisms of that. And so having a exchange like OKX that has best in class custody where assets are held one for one on the platform, evidence via proof of reserve, so you can always see where your assets are, is really important. And then moving again to that institutional end of the spectrum, the provision of cold storage, which means that there is a gap between the internet and the assets being held in essence, really provides the level of certainty that if you are any kind of asset manager, as you guys are, any kind of superannuation fund, any kind of bank, you want that level of certainty. And I spent a lot of time actually in Japan going through the technology that Zodia has developed in order to provide that cold storage custody that is the safest it can possibly be to reassure people that their assets are safely held. And we're seeing a lot of those learnings coming out in Australia in terms of the custody landscape overall.
Yeah, brilliant. I think that's a great segue into the trust element we talked again about just before we started the interview, because if I think about the journey of the institutionalization of crypto, it's such a horrible word, isn't it? That journey of as more and more participants become comfortable, custody has been a big block to solve. But there are other elements to that trust, and yeah, perhaps you'd like to talk about how OKX is building trust in the local market, and maybe something about the dynamic between offshore and onshore exchanges too, because I think it can be a little bit confusing. This is probably more consumer facing, so probably less relevant for our market, but maybe you could touch on those elements a little bit.
Yeah, look, listen, we obviously have a strategy for our onshore presence, and it includes things like user first. We're very much anchored in the end user and doing what's right for them. But one of those pillars is trust. And I think trust needs to be earned and then retained. You constantly have to prove your trust credentials. And so we very much wanted to signal to the market everything that we're doing in order to have earned the market trust. And one of the first initiatives I did actually when I joined as CEO is started to release a quarterly responsibility report, which was basically a look under the hood of our business. Everything from who are the individuals who are onshore that you can speak to in person, via the phone, via live chat, whatever it may be, to get any problems solved or answer any questions you might have, through to our proof of reserves capability and the fact we hold assets one-to-one on our platform, through to the way we enact cybersecurity, the way our custody works. So quarterly, we release this report just to showcase exactly what we're doing from a trust credential perspective. And it was almost for me like a rallying cry to really lift the watermark of all of the operators who are serving the Australian landscape, and to say, this is the kind of level of standard that we need to all be operating at if we're going to deliver that 24 billion in productivity gains, because we need to be operating as if we are any kind of regulated financial institution. And so that's been a really important part of the narrative. We've seen it gain huge traction, in particular with self-managed super fund trustees who behave in many ways like a retail investor, but actually really care about, obviously, the long-term security of their assets. So trust is really important there, as well as to everyday mum and dad investors and our institutional clients. And it's been an interesting evolution as we've seen more and more players come onshore. One of the really interesting things about Australia is we have an incredibly rich and diverse onshore homegrown exchange network, which is fantastic to see. And then there have been players like OKX who have come from offshore onshore to seek to participate within the Australian regulatory environment. We obviously have had to foreshadow what that might be with the lack of clarity, but now that that clarity has come through, we've been able to organise our business around operating in a way that meets the best of consumer protections while still being able to innovate. And I think that the challenge we have at the moment is, because it's going to take 12 to 18 months for that regulation, for that policy to come into effect and the regulators respond, we still do have a kind of an open door to the offshore players. And it's not to say that the offshore players aren't good actors, but they do not have to operate under the same level of scrutiny and rigour that you do if you're operating under Australian financial services licence. And I think that that's where consumers, especially retail consumers, are perhaps opening themselves up to unnecessary risk that they're perhaps unaware of.
You mentioned self-managed super. For our non-Australian listeners, probably worth just quickly double-clicking on that one, a bit like a SIP in the UK or a 401k, where there's discretion. I mean, obviously there's legal wrapper around it too, but it's basically discretion for the individual manage their own super. But I know you've been part of quite a lot of innovation in that market. So maybe you could kind of like briefly describe the scale of the market and then kind of bit more about it, because a lot of our listeners offshore won't know exactly what it means.
Yeah, no, you're absolutely right. It is very similar to a SIP in the UK. And actually, you can tell by my British accent, I do hold a SIP in the UK as well as a self-managed superannuation fund in Australia. And really what motivates people who hold a self-managed super fund is the ability to make their own investment decisions and have agency over those investment decisions, as opposed to putting, your monthly paycheck into super funds where it takes that investment and invests in your behalf, but you really don't get much say in what those investments are. In Australia, about 25% of all superannuation is held by self-managed super funds. And the fund itself operates under a trust structure, and you can have anything up to 6 individuals participate as part of a self-managed super fund. It's really important to note that you do have to have an investment strategy that is written down and is approved by all of those. And so if you do want to invest in digital assets more broadly, that has to be explicitly laid out in your investment strategy, which is part of your trustee document. So we're seeing significant interest, largely from the sub 55 age group, where perhaps their risk tolerance is a bit higher on including crypto as part of their portfolio. A lot of the anecdotal feedback we get is it's part of a diverse strategy. And I think that those individuals are doing 2 things. They're trading, but a much higher proportion are holding, aiming to get long-term returns from the increase in asset prices. And the interesting thing about the market now is that you can earn yield on those holdings as well. So there's the opportunity to earn yield equivalent or better than you would earn if you just had savings in a bank. You can earn yield on stable coins, which are pegged one-to-one to fiat currency. And then obviously there's the rise in asset class if you choose something like Bitcoin. Numbers go up and down, so it is a more risky strategy, but we're definitely seeing more of those trustees wanting to participate in this new asset class.
Yeah, I mean, from an asset manager perspective, I mean, the volatility is, a sign of the infancy of this new asset class. You mentioned it's the first new one in 25 years. I would also argue it's so drastically different that people, regulators included, struggle to come to terms with that. You mentioned just a little bit on the way through there about, the age. Do you think that at the moment, not only is crypto more retail dominated in Australia, there are different levels of participation by age?
Yes, I think there's definitely a strong correlation between crypto and adoption and people wanting more control and agency over their finances overall. It's not just about their retirement finances, it's also about investment. Like when I was in my 20s, you didn't really think about investment, whereas you speak to someone in their 20s now, and a high proportion do have investment portfolios, even if they're put $50 a month away, plus whatever they put into their super. They're thinking about other ways that they can create wealth other than just, for example, buying a home. And so I think we're seeing a much more sophisticated next generation of investors come through. Obviously, they're further away from retirement age. And so they're prepared to take higher risks, knowing that returns might materialize in the long term. And I would definitely say, like, as I say, the sub 55 age group, largely the 35 to 55 age group, are those that we're seeing starting to come into the space and participate a lot more. We're also facing a really interesting inflection point in Australia with an incredibly high transfer of generational wealth coming down the tracks over the next 10 to 20 years. And what's really interesting is we're seeing those younger generations influencing their parents as they start to realize they're the beneficiaries of some of the parental wealth that has been created and wanting to make sure that they're future proofing their portfolios with a diversified portfolio. And so that interaction between the beneficiaries and, the parents has been a really interesting journey to go on to.
It's definitely a journey we've witnessed for the family offices that we manage. And when the next generation steps into that, I absolutely hear that. So I would like to shift gears a little bit, and I don't have a nice, neat segue into this, but I'm super impressed. You're writing a book and it's on AI, and I want to hear all about it, Kate. Would you mind indulging the listener a bit with,
Yeah,
what you're
to.
writing about?
Happy to. I started writing it last Christmas, so it's been almost a year. It's called Edge, and the concept behind it is it's a field guide for how you adapt, perform, and lead on the edge of tech-driven change. And I don't think there's any greater tech-driven change that we're all facing day to day than the advance of AI. And so really it's focused on how do we as individuals adapt to a edge that is ever evolving and ever changing. And I've been working in the frontier of technology for the last 25 years. And so I've had to adapt to four waves of tech driven change. The first being kind of Web 1, which was when Google came about. The second was Web 2, which was when all the social media platforms. The third, Web 3, which is obviously decentralization. And now the fourth, which I think OpenAI has coined as the intelligence age. And so the book is all about taking the learnings that I've developed over that period, some of the mistakes I've made. So there's lots of stories and anecdotes from my own journey. But I'm aiming to provide a framework that allows any individual to be able to adapt to really bring themselves to the fore and be able to perform and lead. It's definitely aimed towards people who are leading teams or leading projects as tech change becomes ever faster. So I'll be finishing off, getting it to the editors for mid-January, and then it should be out in Q1 2026. So
What an
very
awesome
exciting.
project. I'm super excited. So not a stocking filler. Where will it be available? You got to plug your book. You can't leave it like
Yeah,
that.
hoping March 2026, and it will be. I'm self-publishing. I
Okay.
thought I'd go down the self-publishing route because
Awesome.
it is the frontier of that technology. And so it felt like it was really authentic, and I'm learning loads along the way. So it'll be available via Amazon.
Super cool. Can't wait to learn more about it. And just for an additional bonus, is cricket something that you'd like to spend a minute on? Because we're 2 tests down in the Ashes. Is that something?
Indeed, but the thing you will not know about me is I'm Aussie by birth.
I see.
So
Okay,
I am
right, fine.
delighted at the moment, and my husband's
Very good.
British. We fell in love over the Ashes summer of 2005. And so in our household at the moment, cricket is everything. It's on
Excellent.
all the time. And I am definitely in a very happy space as an Aussie, fifth generation Tasmanian, my husband less so. So yeah, I'm Aussie all the way, and quite excited by where this might land.
I think it's essential just to add a little bit of that chat in, because it's been a pretty awesome first 2 tests. And for any British listeners, I'm really sorry.
I'm
Okay, thanks so much for coming on the podcast and explaining a little bit about the trust that you're building through OKX, and also some of the other things that you're working on, such as your book, and maybe and also that high level view on the market. Are there any parting words or anything else you'd like to add in?
Well, I think I said it earlier, the pace of change will never be this slow again. So it's incumbent on all of us to remain curious and learn the new technologies as they come through.
Awesome, Kate. Thanks so much for joining us today.
Thanks, Tom.
Thanks for listening to DACM Insights. If you got something out of this, or even if you didn't, share it with someone who might find it useful. For more information and insights from the team, subscribe to our newsletter and stay tuned for our next episode.